Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, August the 12th, the year 2019. Let's talk trading. EURAUD, day six. Day six of trading this pair. Some people, some of the traders out there watching the videos, like how I'm analyzing this pair, which is a new pair to trade for me. So I'm going to show you a few more ways to analyze this pair. But first and foremost, you know about risk and money management. In fact, I just had a trader ask me about, stop loss. And I've done a few videos on stop loss risk management. So just search my YouTube channel and you can get details on those videos. And one thing, if you have a question, you can post it at the video rather than emailing the question. That way everybody benefits from the Q&A. But ask a specific question. Don't just say, well, where do I place the stop loss? Because as you know, stop loss is a function of risk and position size. But sometimes you know where you want to place the stop loss because based on the chart, this is where it makes sense. So then you have to adjust the position size. So when it hits the stop, if you lose, you don't lose any more than what you're willing to lose because your position size was sized properly for that stop loss. Okay, weekly open gap traders, all gaps filled. And you see, it's the first trading day of the month still, even though my first video was Sunday because I live in the USA. But for the traders over there in Europe and Australia and Japan, their trading day starts on Monday. Now, if you remember from yesterday's video, I was looking for price to hit this area before I started to look for price to return. I believe, was it 166 or was it 160? No, might have been 167. No, I guess it was 167 because that was the level right here. I said, so we still have a ways to go before we start looking for that reversal to the south side. Those of you, if you were trading the break here, this is weekly, looking for it to hit the weekly midpoint. It did that and then some. So, but I'm still looking for that 1.67 area for it to start reversing. Of course, playing the 16600, that would be a psychological short too. Yesterday, I believe when I made the video, price was somewhere in this area. I don't remember, might have been here. But as you can see, it did hit the short zone and it did hit the pivot and then turned around, reverse, and took over and took off. On the daily, you see it broke through the upper wick zone here and took off once again. 145 pip range on the day, and we've got a handful, 5 pairs over 100 pips in range. But on this simple daily chart, you have what you need to be profitable. But fellow traders, always remember that these videos are for educational purposes only, and your results may differ from mine. And Forex trading is risky. You could lose all your money that you put in your account. So if you are seeking advice, seek it from an accredited financial professional, not some Yahoo on YouTube, right? Anyway, enough of that disclaimer. So once again, if this is the only chart and these are the only lines you used, you could trade profitably so long as you have stop loss in place. So you see, if you take the breakout here, it would be profitable in this particular case. But you can do this, you can look at this and see this happens almost every day. You see here, you would have taken the breakout of the lower wick zone here a couple days ago. You were profitable to the north and to the south. Here, you took the breakout to the south. You were still profitable, just a small profit. Now, I'm going to analyze some price travel here. Okay, this one is if the low is greater than the previous low and the high is less than the previous high, you've got an inside bar. And you can see here, you get low greater than previous low 49% of the time, then couple that with high less than previous high. So 12.2% of the time, you get a inside bar on the daily. So, and you can see here, here's the last time we had an inside bar. You can see what happened, taking the breakouts from those levels. So you see here and here, then had an inside bar there. Okay, so once you, and so right here, this inside bar, you go short. There was money to be made here. This inside bar, you took the long. And that's just pretty much how it works. It's not a difficult trade. You just look at the horizontal lines based off the high and the low of the most recent inside bar. And you can do this on various time frames, not just the daily as you've seen in some of my other videos. Okay, I loaded up this profile a while ago. You can see right here, immediately got a long trigger, good for some pips. About 20 pips or so. Oh, and if you wonder how I do that, I have the button in the middle of the mouse. I click that button, then I hold down the left mouse button, and then I just drag it like this while holding the button. That's how I do that, just in case some of you aren't familiar with that feature. But you have to have that middle button on the mouse. If there's another way to do it, I don't know how. Okay, for the pivot traders, you see here we did take out that pivot. We almost took out this pivot, just missed it, just by a hair. You can see here 16623, so we missed it by 3.2 pips, but the day isn't over. So right here, high above and low below the pivot point. So high greater than pivot point coupled with low greater than pivot point 86% of the time. But that is just for the day. So for example, let's see, where did we have a pivot that just got taken out? Let's see, do we see a pivot? Well, for example, right here, this pivot didn't get hit on that day, but you can see, once again, it did get taken out 1, 2, 3 days later. This doesn't take into consideration this occurrence. This is only for the same day. So 86% of the time on the same day, or 86 times out of the last 100, the pivot got taken out on the same day. Now, if it opened above the pivot and the low crossed below, that was 70% of the time. If it opened below the pivot and then the high crossed above it, that occurred 79% of the time out of the occurrences. So here, out of 41 times open greater than pivot, the low was less than the pivot 29 times, or 70% of the time. And so here, out of the last 100 days, the open was less than the pivot but the high was greater than the pivot 47 times, or 79%, almost 80% of the time. So you can see how even on the same day, the pivot gets taken out. You have a high percentage, very high percentage. It makes it a very profitable trade. But once again, does it happen all the time? No. As you can see here, these numbers aren't 100. So that's another reason why you have to have your risk management with your stop loss in place to make sure you don't risk too much. Then, of course, you can see how often the pivots are missed, which aren't too often. So you can let those ride, but you can see here right now, if you let this one ride from last December, you'd be down over 1,000 pips. And I don't think you want to be down over 1,000 pips. So you have to employ a stop loss. Real simple stuff. Okay, price action. Remember, on the price action, especially on this pair, if it opens between two lines, it usually doesn't stay between those two lines because of the range. And you can see here how many times that is true. So if you only have a couple hours to trade and you prefer scalping and you want to trade this pair, that is a method to definitely consider. But just remember, the spread on this is usually over 2 pips. So you're going to be giving up 2 pips on the trade. So you might have to be happy just making 2 or 3 pips per trade before price reverses on you. Just a blank chart here, looking at the H1. I mean, nothing exciting, but you can see right here, it made a new high, failed to make a new high, and pulled back, just trading out of the wick zone right there. So you don't even need my indicator. You can just look at the chart. You see it traded out of the hourly wick zone. You can see here it's in these daily wick zones. You can look at the week. You can see here the weekly wick zones it's in. You don't really need the indicators if you know what to look for. The indicators, though, definitely make it easier to see. But, oh, and just so you guys know, I know somebody's going to ask, so let me just get ahead of you. The price travel analyzer, that was part of the 2017 donational package. And remember, each year requires a separate donation just to be fair. So if you get the 2019s and you want this indicator, then you might want to also donate for 2017, or you just might want to donate for 2017 if you want this indicator. And before somebody says, well, if you're some great trader, why are you begging for donations? Number one, I'm not begging. Number two, it was a buddy of mine's idea that I started this in the first place. And geez, I've been doing this, I don't know how many years. And it's just anybody that knows me, if you Google TheRumpledOne, you can see a lot of people talk a lot of trash about me. But the funny thing is, some of these people like to use my indicators. So I just find that amusing. How many forums have banned me, yet they have, people have taken my code and put it over there so people can download it. I just find that amusing. In fact, there was some thread just the other day, somebody's accusing somebody of being me again. They just won't give up. But anyway, main point being this is part of the package, but you don't need to have these indicators. You can keep stats yourself. You can use your eyeball and say, hey, you know what? I can see it. If you can't see it, then how can you trade it, right? And when I say see, not necessarily with your eyes, but in your mind. If you don't see how it works, it's probably not going to work for you. Because remember, fellow traders, it's not what you trade, it's how you trade it. So go out there and continue draining the banks this week.